Okay, champs, welcome back to Libertas Trading and welcome to the event preview for the UK monthly GDP coming out on the 12th of December 2025. So just a quick heads up, apologies that this is being released, 40 hours before the release. As I said in the weekend preview, I am going away this weekend for my birthday, so just getting things tied up now. In terms of where we are for the Bank of England at the moment in the UK economy, we all know about weak growth, we all know about the weakening labour market, we all know about sticky inflation, which is showing signs of weakening, but not fast enough for the Bank of England's liking. We know about the budget, we know the mess the UK's in. So what about next week's interest rate decision? So on Thursday, we've got the Bank of England. I believe there is 23 basis points priced in, which works out as a 92% chance of a cut. So in terms of this print, also the day before, so the eve of the Bank of England, we've got the UK CPI. The eve of the UK CPI, we've got UK labour market print. So, the main prints are coming in next week. This is only a monthly GDP number as well, so it won't be as impactful as the quarterly stuff. So could this be impactful for markets? Yeah, it could. I think for me, I'll probably be sticking to a scalp. If we do get big enough numbers, I will be looking for a more longer term trade than just a scalp. But we'd need some solid deviations for that. So let's go quickly check out the trade scenario sheet. So as I mentioned, in the past, it's always a bit more difficult to get reactions out of the monthly data compared to the quarterly prints for UK GDP. So I'll be looking for all of the numbers to come in line. And if not, we want to see some big deviations. So ideally, we want all these numbers to print or all these numbers to print. If a few of these come in flat or a few of these come in flat, you'd want to see some bigger deviations on the other numbers. You can see some nice moves out of UK GDP if the data deviates enough from consensus and we get some shocking numbers. So I'll be open to holding positions through the European session if data and price action makes that attractive enough. Revisions are always a risk of this data set, so of course we need to be mindful of that. So for the GDP month on month, for a dovish reaction, I'll be looking at minus 0.1% or lower, which is below the minimum, and after last month's revision would show 4 months in a row of negative growth or zero growth, which, would be pretty damning, pretty dismal to be fair. For a hawkish reaction, I'll be looking at 0.3% or higher, which would be above the max and the highest print since June. And then for the GDP year on year, I'll be looking at 1.1% or lower, which again, that just 1.1% growth just sounds so bad. 1.1% or lower, which would be below the low and the joint lowest going back to May. It would be in line with last month's print, but as it's so much lower than consensus, it should be okay. So we did print at 1.1 last month, but with the inline being 1.4, I think 1.1 should be enough for a scalp. And then for a hawkish reaction, I'll be looking at 1.6% or higher, which would be above the max. And with June, it would be the highest print since March. Then for the services month on month, I'll be looking at for a dovish reaction, minus 0.2% or lower, which would be on the minimum, the lowest since June, and show contraction in the only growing part of the UK economy right now. And then for a hawkish reaction, I'll be looking at 0.3% or higher, which would be above the max and the highest print since August. For the services year on year, I'll be looking for a dovish reaction at 1.5% or lower, which is below the minimum and the prior. And then for a hawkish reaction, 1.9% or higher, which would be above the max and the highest print since December of 2024, which would be really encouraging. So medium term plays, bearing in mind this was recorded Wednesday before some major events, the Bank of Canada presser, the SMB tomorrow morning, the FOMC tonight, and Aussie jobs tonight as well. So for a hawkish reaction, if the beat is big enough, we could look at some euro pound downside. This is the purest growth differential pair for the UK and one I tend to favour for trades out of UK data. So we're at a really interesting level of resistance at 87.50, and if we keep below this level, the pair looks prime for a breakout retest move lower. So just looking at the euro pound daily chart, you can see here this solid area of resistance. We've broken above it, retested, broke higher. We've now pushed below it, hit this trend line, and we are now retesting again. Sorry about this. There we go. So 87.50 level. Check out the hourly chart. We found some solid, to be fair, in a bit of a channel here, between 87.50 and 87.25. So, a break below this on Friday could be decent and look for some nice downside. One thing I would mention, of course, this is being recorded Wednesday afternoon. So, we've got about 40 hours of price action to come before this. So, all could change before then. And then for a dovish reaction, I'd look at pound Kiwi downside. So after that more hawkish than expected RBNZ last Wednesday, the Kiwi has been pretty strong. And because of 325 basis points of cuts in the last 18 months. The New Zealand economy is expected to have some decent tailwinds for growth. We've got interest rate differentials, which point to a lot of downside for the pair. So let's quickly check out the pound Kiwi chart, guys. So this is the pound Kiwi chart. Technically, nothing really that special till we get to that 2.28 level, and maybe this trend line if we get there. But if we do enter in the, yield differentials, this is the 10-year differentials, we can see some massive downside catch-up potential there. So that could be nice looking at some shorts. In terms of short-term plays for any scalps, as usual, I'll be sticking to the euro and the pound. You can see some decent moves from UK GDP if the deviation is large enough, but as always, I'll be locking in profits around these levels below. So for the euro pound 7 pip target and for the pound dollar 10 pip target. So these numbers are based on previous reactions we've had. If you think these numbers are too low, then aim for something higher, simple as that. So 5 of the 6 of the most recent tradable prints, it would have been better to enter 10 seconds after the release. So once the spreads calm down, basically. Christmas trading is well underway now with the FOMC out of the way, so I'll be very cautious around my entry level and risk. Of course, this is talking as if this Friday morning. Spreads may be a little wild, which would leave us with an uphill battle if we enter too soon or don't get the entry we'd normally expect. So just to show you last month's reaction, because the pound has been very sensitive to data at the moment, and we've seen some quite large moves. Remember that, was it the October CPI print or was it the September one? It was the October CPI print that came in weak, but it wasn't anything special. We saw that huge move. We saw GDP last month. This was the quarterly GDP. Bit of a mix between red and green here. We didn't really see many huge misses below the minimum, but we did see a half decent reaction here. So there would be chance for a decent scope on this, but just with it being the end of the year, being after the Fed, I don't want to risk any money now. We've had a decent year. There's no point chucking all the profit, or some of the profits away on a UK GDP print. And then as quickly showing you the 5-second chart, again, it would have been worth waiting 10 seconds for that little pullback we normally get off UK GDP. And then price moved nicely higher. So you would have made, I didn't trade this one for obvious reasons, but you could have made some decent money on this. So, we may see larger than usual reactions out of Friday's print, but I'll be keeping it nice and cautious. So that's it for the UK GDP preview. Good luck, guys, and any questions, of course, just give me a shout.